Today we're going to cover the CBOE Emerging Markets Volatility Index against the Emerging Markets ETF. And we're going to just take a look at whether or not it makes sense to be a buyer of the emerging markets when the emerging markets VIX exceeds 27.5, when put positioning gets really high and there's a lot of fear in the market. Is that always a decent indicator to start to take some long exposure, yes or no? So let's have a look. In this instance, you were a little early, but it worked out okay, so mixed. Here, it definitely made sense to get long, so that worked. Here you got a good bounce, but here was a fail. So here, it definitely made sense to get long exposure. Here it made sense. Here it made sense. Here you got a little bounce and a rollover. Here you got the bounce. Here you got a bounce and a rollover. That's a fail. Here you got a little bounce, but I'd call that a fail. This one worked great. This one you got a bounce and then a rollover. This one worked great. This one worked great. This one was a little early but worked well. This one you got a bounce and a rollover, so call that a fail, 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 too early. Bounce here and a nice bounce here. So certainly better than a coin flip. I think it's worth looking at from an emerging market standpoint, so you can see where there's real fear in the market and then start to look at selected names in that context and see if it makes sense to move ahead. So hope that helps on the emerging markets. And if you liked it, hit like and subscribe. Talk to you soon.